Right, up until now we have looked at 4 bullish patterns, which is the hammer, the bullish engulfing pattern, the piercing pattern, and the morning star. Now we will start with some bearish patterns. Okay, so first of those very important bearish patterns is the shooting star. Now, bearish pattern means the market is likely to go down or remain neutral. So the market is ascending and you have a pattern, and then you don't know whether the market will go sideways or whether it will go down. But chances are the market is not likely to continue to go higher. So first let's look at how the shooting star is constructed. Now you must be familiar with this. If you flip this around, like if you draw this candle by flipping it around, that becomes a hammer. If you flip it around, it becomes a shooting star. Now, a hammer must come after a downtrend. A shooting star must come after a uptrend. The upper shadow must be more than or equal to twice the height of the real body, and the real body must come near the lower end of the trading range. And the color of the shooting star can be black or white. Just take the hammer and just apply all of the principles in reverse. So this is a single candle bearish pattern. Color of this body does not matter. It can be white or black. It is better if it is black, because if this is a bearish pattern, must come after a downtrend shown by the black arrow. The long upper shadow must be at least twice the height of the real body. So this upper shadow must be at least twice the height of the real body. So this is the real body. In hammer it was the reverse. The real body must be as small as possible. So this real body, the smaller it is, the more will be the height of the upper shadow. So it will help us satisfy this condition, more than twice the height of the real body. The lower shadow must be as small as possible. We have discussed this many times before. The lower shadow represents bullishness and the upper shadow represents bearishness. So since this is a bearish pattern, we need a lower shadow which is as small as possible. Let's quickly have a look at an example. So this is an intraday chart. This is 15 minutes chart. So this is SBI Bank. So the market is going up and you have this shooting star pattern. Now, as we mentioned before, the color of the real body does not matter. Doesn't matter if it is white or black. The upper shadow is more than twice the height of the real body. There is hardly any lower shadow. So if I were to take a short position here, I would take the short position at the closing. Then above this, I will keep the stop loss, because this is where the bears came into the market. So the high of the shooting star becomes resistance. This is where the bears are sitting. And then I would expect the price to go down. Remember the conditions again. One is the shooting star must come after an uptrend. It must have a long upper shadow, which is more than twice the height of the real body. And it should have as small a lower shadow as possible. Okay? So in this case, your stop loss would have hit because the shooting star is not confirming any prior resistance. However, there is not a single candle from here till here where they have closed above the resistance area created by the shooting star. So although this candle has poked its head above the resistance of the shooting star, but it has failed to close above that resistance, which is why I have drawn a purple dotted line. So even these two candles, they have failed to close above the resistance line created by the shooting star. So remember, shooting star creates a very powerful resistance. Other thing to mention is that in the hammer, the hammer comes after a downtrend. And even if it's a downtrend, even if it's a short-term downtrend, that is fine. But in shooting star, it should be a long drawn uptrend. It cannot be a very small uptrend. That is an important point to be, or important distinguishing factor between the hammer and the shooting star. Generally, the shooting star works best when it is coming after a long uptrend as shown here. Okay? Right. Now let us have a look at the types of shooting stars. So let us recap the conditions of a shooting star. A shooting star must come after an uptrend. The upper shadow must be more than twice the height of the real body. The real body can be white or black in color. The lower shadow must be as small as possible, and the real body must be near the lower end of the trading range. And the high of the shooting star becomes the resistance area. Okay, that's the basic criteria of a shooting star. If we look at all of these candles, all of them are shooting stars, provided they all come after a uptrend. If there is a candle which looks like a shooting star but comes after a downtrend, that is not a shooting star. A shooting star must always come after an uptrend. Okay? As discussed before, the candle pattern or the prior trend is as important as the candle pattern itself. So the difference between these two is the color of the real body. This would be more powerful than this because it's closed below the opening. Again, same in this case, the size of the body has reduced, so which has increased the amount of the upper shadow, which is upper shadow must be twice the height of the real body. So the lower the shadow, the better it is. Lower the real body, the better it is. And these two, if you notice the difference between these two and these two, is that there is no lower shadow for these two candles, so which is even better. So of all this, I think this would be the best shooting star. Let's quickly have a look at an example. So this is daily time frame, Axis Bank. So you have a nice bottom formation here. Can you recognize this pattern? It's coming after a downtrend. We have looked at four bullish patterns. One is the hammer, then the bullish engulfing pattern, then the piercing pattern, then the morning star. So this is a bullish engulfing pattern because the long white real body completely engulfs the prior black real body. So the market started ascending from here, and you have the shooting star. Why? Because it is coming after an uptrend. It's a small real body. The upper shadow is more than twice the height of the real body. And it is coming after an uptrend, also confirming this resistance area. This candle has failed to close above this red line. So that's a shooting star for you. It's coming on a daily time frame after 4 consecutive up candles or bull candles. You have a shooting star. So that can give you the confidence to take a short position, also given the fact that it is confirming prior resistance area. So if I were to take a short position, that would be the entry. Just above this would be the stop loss, and I would aim for the price to go down, preferably meet this target level. Okay? So in this case, the target was easily achieved, and not a single candle which broke above the resistance created by the shooting star. Okay? Alright, let's look at what is a classic shooting star. We have looked at similar examples of this when we studied the hammer. So look at these two shooting stars. Both have a black real body, but this I would prefer because it does not have a lower shadow. Okay? Because the shooting star is a bearish pattern, The lower shadow represents some kind of bullishness. So on this candle, there is no bullishness. It's all bearishness as represented by the upper shadow. Here you still have some amount of bullishness. So given a choice between these two candles, I would prefer this to be as a very strong resistance point. So that's the difference between a normal shooting star and a classic shooting star. In this case, this is a normal shooting star because it still has a small lower shadow. If there were no lower shadow here, that would become a classic shooting star. So let's look at this chart. There is a nice downtrend here. Can you recognize this pattern? This is a variation of a bullish engulfing pattern. So the white candle wrapping around the black candle. There is a different name for this pattern, but I am calling it a variation of a bullish engulfing pattern because it has opened itself within the black real body. And we have seen examples of this. If this candle would have been like this, with a shadow like this white candle, so the white body is completely engulfing the prior black real body. So that becomes a bullish engulfing pattern, which is why the market ascended. So the market is increasing and suddenly you have a shooting star. Now this candle I wouldn't call as a shooting star because you see the upper shadow here. We mentioned that the you see the lower shadow here. We mentioned that the lower shadow must be as small as possible. So I wouldn't qualify this as a shooting star. Nonetheless, if you see, even if we don't call it a shooting star, the resistance has held. For example, none of these four candles has been able to close above this resistance line. So even though we are not calling it as a shooting star, but it is acting as a shooting star because it's failed to break, the other candles have failed to break this resistance created by that candle. Okay? Now if we look at this candle which is coming after an uptrend, the upper shadow is more than twice the height of the real body. And if we draw a resistance line here, see, it is confirmed by the shooting star. It is confirmed by the shooting star. So first signal is the shooting star itself. The second signal is the prior resistance confirmation, which gives us the confidence to take an entry here. This is our entry point. Then stop loss we will keep above the high of the shooting star, just above the high. So that would be our stop loss. And we would aim for the price to go down, preferably beat these lows. That would be our S1. So support 1. So that's a nice reward to risk trade. This is the risk. That's the reward. So it's easily more than 2:1 reward to risk trade. And in this case, it was very quick, just 1, 2, 3, 4 candles. Within 4 candles on a daily chart of Britannia, we had the target achieved. So that's the power of the shooting star, and none of these candles is nowhere near the resistance created by the shooting star. Notice this candle as well. The latest candle is also perfect shooting star, not a classic shooting star because the body is still white and there's still some lower shadow. But definitely all of the conditions for a shooting star are met here, and this is confirming the resistance area that is created here. So I don't know what happened next, but chances are the prices went down and at least reached this price or this price. Can you recognize this pattern? That's a hammer. The lower shadow is more than twice the height of the real body. So the price ascended from here. Can you recognize this pattern now? Again, it is not a perfect bullish engulfing pattern, but the price has, instead of opening here somewhere, it has opened far above that level. So there is an invisible white candle here which I have drawn. So it's a variation of a bullish engulfing pattern. All of this confirming the prior support area. So multiple signals we see here. Okay. Right, now let us have a look at the shooting star psychology. What exactly is happening here is that the market is in an uptrend, so the bulls are very, very happy. Now, in this case, I have taken a white real body, okay? So, when the candle opens and when it closes, assume it's a daily candle. At the close, the bulls are very happy. However, the bulls are also looking at this tall upper shadow, which indicates what? Which indicates bearishness in the market. So, although the bulls were happy during the uptrend, they have now noticed that the bears are coming back into the market and trying to push the price down. So, when the price was here, the bulls were thinking intraday. When the price went here, the bulls were thinking, okay, we are making good profits, let's stay in the trade. But by the time the day closed, the price is back here near the lower end of the trading range, which means during this downfall, it was making the bulls very nervous. That is why the shooting star is a bearish pattern. So probably this is where the bears are sitting and they are not allowing the price to go higher than the high of the shooting star pattern. So that's why we say that the high of the shooting star becomes a resistance. Okay. Let's quickly have a look at an example. Now this is a daily chart of Workhart. So it's a nice uptrend and you have a shooting star. The upper shadow is more than twice the height of the real body. Okay, and the real body coming near the lower end of the trading range. Moreover, you see these three candles here. If I draw a line, all of these four candles, 1, 2, 3, 4, none of these four candles have been able to break and close above this red line that I have drawn, which means this is very strong, multi-tested resistance point. The shooting star is confirming the resistance created by these three lines. If I look at this candle, I cannot call it as a shooting star because of the extended lower shadow. Okay? Ideally, I would want this real body to be down near the low of that candle. But nonetheless, it proved that the prior resistance is holding, and finally, this clear shooting star told us that after an uptrend, the trend is likely to either end, which means the price may go neutral, or it is likely to completely reverse from here, but less chances that it will go up from here. So remember in the first slide we mentioned that the trend is either likely to end or reverse completely. So that's any reversal pattern which we see, whether it is a bullish reversal pattern or a bearish reversal pattern. Any reversal pattern indicates that the prior trend is ending, which means the price will either go flat or it will go down or up. But for a bearish pattern, the chances are very low that it will go up. So the shooting star points towards end of this prior uptrend while it is confirming a prior resistance area. So if we were to take this trade, we might go short here by keeping our resistance point here, and we can expect the price to go down from here. This is the first support area, S1. This is the second support area, S2. We can aim at either this target or this target. In this case, I think both the targets have been achieved. No, S2 was not achieved, but S1 was achieved. We can even take this as the support area. So the shooting star has worked. And after the shooting star, for the next many days, the price was nowhere near the high of the shooting star. Okay? Right, now let us have a look at the strength of a shooting star. So let me repeat, the shooting star comes after an uptrend. The upper shadow is more than twice the height of the real body. The color of the real body does not matter. The lower shadow must be as small as possible and the real body must be as small as possible. And the upper or the high of the shooting star becomes resistance, okay? So we are looking at the strength of a shooting star. If we compare these two, which one do you think is more stronger resistance, or which one do you think provides us a more probability that the market will go down from there? Obviously this one, because it has a black real body, rest everything remains the same. Same applies if I compare these two. This one is more potent. And same applies here. This one is more potent. If I take this candle and this candle, which one do you think is more powerful? Obviously it is this candle. We are comparing this one and this one. Okay, obviously this one is more powerful because it does not have a lower shadow. Okay, so those are some basic ways of looking at the strength of a shooting star. Does not necessarily mean that all of this is hard and fast rule. It depends on the market context as well. For example, if you have this shooting star confirming prior resistance, but this shooting star not confirming prior resistance, then in that case, this one is more powerful. Okay? Let's quickly have a look at an example. Let's quickly have a look at an example. This is Nifty weekly. Remember, this is a weekly chart. The higher the time frame, the higher is the probability that the trade will work out in our favor. It's a nice uptrend. It's a long uptrend actually because it's a weekly chart. So on this week, you have a shooting star. We can't call it a classic shooting star because you still have this small lower shadow, and this is a weekly chart. So if we expand this, maybe the shadow will be more than that. So you have a shooting star, a traditional shooting star, normal shooting star. And I draw a line here that is a resistance. So I would keep my stop loss just above this. I would take the short position here. And I would aim for the price to go down, preferably these lows, or these lows we will try to target. It's a nice reward to risk trade. This is the risk. This is the reward. Now for all those who are also into options trading, this kind of pattern is very useful because you know that the trend is either likely to end or likely to go down. So you can do some spreads here. Now those of you who have no idea what are options and how to trade them, you may not understand spreads or calls or puts. But for those of you who know options, you know how to trade this kind of a situation where the chances of the price going up are very low. The market can either go sideways or down. So you can probably do a call spread here by selling a call, buying a call, having a hedged position. But that is not the scope of this video. The scope of this video is to keep it simple. Just by mentioning that the shooting star high becomes resistance. So you have this is our risk. And that's our reward. This much. So that is how I would look at this spread. So in this case, let's analyze this. If I draw this line, our stop loss was hit here. Okay. Now this candle decisively closed above the high of the shooting star, which means that the bulls are happy here. They know that the prior resistance has been broken on that particular week. However, the immediate next candle completely negated the bullish position, which means that the bulls could not hold these highs, or bulls could not sustain the break of that resistance. When such kind of things happen, then we say that the resistance still holds, that although it is broken, but this area itself, if I look at this area, that is where the bears are coming back into the market aggressively. So in this case, although our stop loss was hit, however, here we got a confirmation that the resistance area is still holding and we can initiate another short position in this market. Okay. Alright, now let us have a look at the special shooting star. You can see from the diagram that why this is called as a special shooting star. It has no lower shadow. It has no real body. It's the doji candle. A doji is a candle where the open and the close are the same, and the open and the close are appearing at the low of the candle. So this is also called as a gravestone doji because it looks like a gravestone. All other conditions of a shooting star are satisfied in this case. So that becomes our resistance, that becomes our entry point. It's a very powerful pattern because we said that the real body should be as small as possible. In this case, it cannot be smaller than this. Then we also said that there should be as small a lower shadow as possible. So in this case, there is no lower shadow at all. And the upper shadow must be as tall as possible, which indicates the bearishness. So this is a special kind of a shooting star. It's very rare in appearance, but whenever it appears, it is very powerful in forecasting the stopping of a uptrend. Okay. Now let us look at a daily chart of SBI. So we have a shooting star here. It's not a perfect doji candle because there is still a small white real body, but assuming it's a flat line where the open and close are the same, and assume that there is no lower shadow, then that becomes a special shooting star. But nonetheless, the special shooting star is very rare, and this confirms the resistance area created by these candles here. So the first signal is the shooting star, the second signal is the confirmation of the prior resistance. So we can take entry position here. We can keep our stop loss just above the high of the shooting star, and then we can aim for the price to go down. This might probably be our target. What is this pattern? This is hammer. We know that the low of the hammer becomes support, and that would be S2. S1, S2. We can also take this line. So this becomes our support zone. This area becomes our support zone. And the shooting star is forecasting the reversal of a trend. Reversal of a trend means the trend is up. So reversal means it will either go flat or it will go down from here. Okay? How in this case it completely reversed. So it has gone completely downward. So both of these targets were met. So it has broken this support zone. This target was not met because you have what is this pattern? You have a morning star pattern here. So the price went up and this became support area. So having prior knowledge of what are bullish engulfing patterns, what are morning star piercing pattern, that will tell you when to exit. So if you had taken a short position here and then you see this morning star, you know that the low of the morning star becomes support, or price may go up from here because the morning star is a very powerful bullish pattern. In that case, you would exit here. So from here till here, that is your profit on a short position. Okay. Now, there is one more scenario, the special shooting star after a tall white candle. This is very important because yes, the shooting star satisfies all the conditions of a normal shooting star, but if we look at these two candles, it's a clear sign of shift in psychology because on the tall white candle, it's a tall white candle, so the bulls are in complete charge of the market on the tall white candle. However, you have this special shooting star. It doesn't even have a real body, which indicates that the bears are definitely back in the market, by showing that just to compare the sizes of these two bodies, there is no comparison at all. This is because the bears are in the market. Plus, how can the bulls ignore the long upper shadow, which indicates that bearishness? Okay, so that's a special shooting star after a tall white candle. So very powerful a reversal pattern. Something like this. So first you see there's a tall white real body. The bulls are very happy because the trend started here. Why did the trend start from here, which is this pattern? That's a morning star pattern, and it's a perfect morning star pattern because the indecision candle is not touching the body is not touching both the first and the third candle. So that's a morning star from which the price ascent began. This is a daily chart of Eicher Motors. This is daily. Now up until here, the bulls are happy. Those who bought at the morning star, the bulls are happy here. When this candle opens, the bulls are even more happy because it's a gap up opening. The bodies are not touching each other. So when that happens, the bulls are happy. But during the session, the bulls have seen what happened in the market. They have taken the price beyond this 18,000 level, but could not close above that 18,000 level. So probably the bulls are thinking that 18,000 is the maximum that the price can go. The bears are happy because they were successful in creating a long upper shadow. They were also creating in stopping the price near the open itself. So there is a clear shift in psychology. First is the difference between the height of the two bodies. One is a long white candle, one is a small tiny black candle. So the shape of the body itself tells us that who is in control of the market, or who is likely to be in control of the market. So if I were to take a trade here, that would be my entry on a short position. That would be my stop loss. And I would expect the price to go down and try to break this. That's our support area created by this morning star. This would be a risky, low probability trade because it is not confirming prior resistance. Another reason is because even though the candle has closed with a small real body, you can still see that it is still a new high close, which means that the bears who bought here are still happy because the price is still up above their buying point. Okay? So this is a risky, low probability, aggressive trade. But because of the shift in psychology, and if you want to take, if you are able to manage this risk and aim for this high reward, then you can go for that trade. In this case, it has worked out fine. If I draw a support line here, see this candle the candle could not break below the support because we know that the morning star is a very powerful bullish pattern. So this candle, this and this candle, none of these three candles could not close below the support created by the morning star. They were able to break it but could not close it. The intraday they went and crossed that support line but couldn't close below that support line. The closing is important. So you can see how the morning star support is powerful. You can see how the shooting star resistance is so powerful. So this is a daily chart. Within a couple of weeks, I think the target was achieved. Okay. Now let us have a look at patterns which are not shooting stars. I call them non-shooting stars. So if you look at these two candles, the upper shadow is not equal to or more than twice the height of the real body. So I don't care whether this candle comes after an uptrend or a downtrend. These are not shooting stars. Okay. If you look at these two candles, the upper shadow might be equal to or more than twice the height of the real body. But you look at the lower shadow. We mentioned while defining the shooting star is that the lower shadow must be as small as possible. But in this case, I would say the lower shadow is almost more than 50% of the upper shadow. So again, these are not shooting stars. Again, this candle, it looks like a shooting star. All conditions are satisfied. But again, for the reason for that lower shadow, because of that long lower shadow, I wouldn't be comfortable calling this as a shooting star. Okay, so we have to look at each candle properly to say whether it's a shooting star or not. A shooting star is a candle where it comes after an uptrend. It comes after an uptrend. The upper shadow is more than twice the height of the real body. The real body must be white or black. That is okay. There must be a minimum lower shadow. If the lower shadow is not there, even better. So those are certain basic conditions of a shooting star, and the high of the shooting star becomes a resistance. So let's look at an example here. So this is a daily chart of Tata Motors. A nice uptrend started here. Started from here, and it's a daily chart. So now you have this candle. What do you do with this candle? This is not a shooting star because the height of the upper shadow is not equal to or more than the height of the real body. So even though it is coming after an uptrend, we cannot call it a shooting star. So assuming that we do not have correct knowledge of candles and we think that this is a shooting star, and we take a short position here thinking that the market will go down, look what happens. A big candle would have created a loss for us in this short position. Now look at this. Is that a shooting star? Yes, it looks like a shooting star, but I would be uncomfortable calling it a shooting star because of the same reason I mentioned in the previous slide, which is the long lower shadow. That is something that makes me uncomfortable. So although my position would have worked if I would have taken a short position here and expected the price to go down, although my view would have worked, but I would not have taken this trade because I want this real body to be more down so that it looks like a perfect shooting star. Okay, so we have to be careful about such candles. Even though they are appearing after a nice uptrend, doesn't mean that they are shooting star. Even though they look like shooting stars, they are not. Okay? Okay, now we will look at something called as a shooting star trap. Remember the definitions of a shooting star. The upper shadow must be at least twice the height of the real body. There should be as small a lower shadow as possible. The real body should be as small as possible. The upper shadow must be as tall as possible. And it must come after a uptrend. Now in this case, this candle, I'm calling this as a candle. I'm not calling this as a shooting star because the trend is wrong. The shooting star must come after an uptrend. It must not come after a downtrend. Remember that. So that is why people who think that this is a shooting star and take a short position here might suffer because from here the market may go up because the market has already been in a downtrend. So this is a trap. Do not fall into this trap. For a shooting star, it has to come after a uptrend. Remember what my coach Steve Nissen says, that the candlestick patterns are as important as the prior trend that they come after. So it's not just the pattern. We also look at the trend. So in this case, the trend is wrong. So this is a candle for us. This is not a shooting star for us. Okay. Let's have a look at an example. So this is a chart, daily chart of Dabur, avoiding the shooting star trap. So is a nice downtrend pointed by the blue arrow. You have a candle Remember, I am calling this as a candle. I am not calling it a shooting star because it is not a shooting star. A shooting star is something that comes after an uptrend. So pointed by the red arrow, we have this candle which looks like a shooting star. Now people might think, oh great, this is a shooting star. Let us go take a short position here, thinking the market will go down. But the trend is wrong, that the shooting star must come after an uptrend, not after a downtrend. So if you take a short position here, this is what happens. You would lose money. So those people who do not have correct knowledge of candlestick patterns will end up calling this as a shooting star and take a short position and keep the stop loss here. In the next candle itself, your stop loss was hit. So that is the reason why I believe that you cannot have a cheat sheet for a candlestick pattern. I have seen many people doing cheat sheets where they put the candlestick patterns like this and say that this is a shooting star. No, the shooting star is something which comes after a uptrend, not after a downtrend. So the trend is also important. Just by looking at that cheat sheet saying that, okay, this is how the candlestick pattern looks like, this is how you draw. Even school kids can draw this kind of pattern. But it's not as easy as that. We have to look at the entire market context and the trend after which the candle comes. Okay, so this is not a shooting star. Have a look at this candle. Is that a shooting star? Of course it is a shooting star because it is coming after an uptrend. It is a nice long upper shadow, more than twice the height of the real body. In fact, there is hardly any real body here. And as very little, very tiny lower shadow. Now, you might argue that this is not coming after an uptrend because there is a box range here. The price is stuck. The price is flat. Rohit, how can you call this as a shooting star? But wait, if you look at the uptrend that started from here till here, that is a shooting star because the price has gone from here till here in less than, 2 weeks, because it's a daily chart. So the price has gone up from around 260 to about 280, around 20 units on a stock which is priced at 280. That's quite good percentage point gain in the price. So that's an increase in price. That's an uptrend. So that is why I call this as a shooting star. One more very important point to remember here is that when we say reversal patterns, whether it is bullish reversal or bearish reversal, reversal does not mean that the price is going to completely reverse down. A reversal pattern means that the prior trend is ending, which means if the shooting star is a bearish reversal, it means the price will either go flat or it will completely reverse. We don't know which of the two is going to happen. All we know is that the probability of the price going up is very low because this is a bearish reversal pattern. Bearish reversal pattern means it reverses the prior trend. Reverses means it will either go flat or it will go down. We don't know which of the two is going to happen. So remember, reversal pattern does not mean that the pattern is going to reverse completely. We just have to see what happens next by keeping our stop loss at the high of the shooting star pattern. So in this case, if I keep the stop loss at the high, see how it is respected by all of these candles. This is almost 2 weeks worth of price action. For the next 2 weeks, this shooting star resistance has held as a very strong resistance. That is the reason why I call this as a shooting star. In hindsight, if I don't have these candles, if the market has just closed here, I would call it a shooting star. But when I look back, yes, this resistance has held. So when we call it as a shooting star, that's a correct way of looking at candles because it is coming after an uptrend. It satisfies all the conditions of being a shooting star. Okay, so the moral of the story is avoid the shooting star trap. This is not a shooting star because it is coming after a downtrend. In fact, it has a name which is called as the inverted hammer because it looks like a hammer which is just inverted. There is a reference for this in Steve Nissen's book, Japanese Candlestick Charting Techniques, where you can see that this is called as an inverted hammer. In fact, it is a bullish pattern. Okay. So don't fall into the trap of thinking that this is a shooting star pattern. It is not. Shooting star pattern must appear at the top. Okay. Right. Now let us have a look at the power of a shooting star. Okay. So the shooting star is an extremely powerful bearish sign, especially when it is coming after a prolonged uptrend. Okay. So in this case, we have the daily chart of IndusInd Bank. We are looking at a power of a shooting star. So this is a steep uptrend in the market, and you have a clearly established resistance point here. Most interestingly, you have this 1800 level, which is a psychologically important round number ending with 2 zeros. So that number might have some significance. So if we draw a line here, you can see this shooting star is respecting that level. The shooting star is also respecting the resistance created by this candle. So the upper shadow is more than twice the height of the real body. The lower shadow is small, although I would have liked the real body to be little bit down so that the lower shadow is even smaller. But still, given the fact that this candle is confirming both this resistance line or this resistance zone, I call it as a shooting star because it is coming after a prolonged uptrend. Now, the objective of this video is to see the power of a shooting star, how the shooting star creates a crash in prices. It's a daily chart. So if I were to take a trade here, my entry point would be this. My stop loss would be just above this resistance zone. Because I know that the bears are sitting here somewhere in this zone. So I would keep my stop loss above this zone, and I would expect the prices to go down from here, which is exactly what happened. So if we take this low or this low or this low, all of these targets were achieved if we would have taken a short position here. Okay. Only thing is that for this resistance, for this support, we have to look at the reward to risk ratio. So if I'm taking this as my stop loss, so that is my risk and that is my reward, which is not 2:1. Maybe it is 2:1. I have not measured it, but I think this zone of support is more potent support zone, which was broken. You can see how many consecutive black candles we got here. So the shooting star gave us an early warning of this downfall to come. Moreover, the shooting star resistance was confirmed. As we discussed, there was one resistance line here, another here, somewhere here. So the price, and when the price entered that zone, it came back down, because we know that in that zone, the bears are watching the market. The bears are not allowing the price to cross that zone. Okay? Alright, now we look at the shooting star as a resistance. At least that is our focus in this video. We have looked at the 4 bullish patterns where the hammer, the bullish engulfing pattern, the piercing pattern, and the morning star have become support. Similarly, in the 4 bearish patterns, the shooting star becomes resistance. The high of the shooting star becomes resistance. That is what the focus of this video is. So whether it's a black real body or a white real body, the high of the shooting star becomes resistance. So I would keep my stop loss just above the high, maybe 1 or 2 ticks or 1 or 2 points or 1 or 2 units higher than the high created by the shooting star. And I would have my entry points like this for a short position. So let's quickly have a look at an example. Is this a classic shooting star or is this a normal shooting star? This is a classic shooting star because look at the nice upper shadow, more than or equal to twice the height of the real body. It is far more than the twice the height of the real body. There is no lower shadow, which is great. The small real body is very, very small, which I like about this candle. So it is a classic shooting star and it is coming after a steep uptrend. Now this is an intraday chart. This is 1 minute chart of Grasim. We want to look at whether the shooting star becomes resistance. So as mentioned before, if I take the high of the shooting star and call it as resistance, I would keep my stop loss just above this purple line like here. I would take my entry point at the closing of the shooting star and then I would aim for these lows. Okay, so the market from here is likely to go flat or it is likely to go down. But in this case, this will be a high risk, low probability, aggressive trade because the shooting star is not confirming any prior resistance. If it were confirming a prior resistance, then in that case, this would be a conservative trade. So if I'm an aggressive trader, I want to make money out of the quick downward momentum in the market created by this long upper shadow on a 1 minute chart, I might think of taking this trade, but I would have my stop loss in place. So in this case, the trend did not reverse aggressively. Yes, it went down. So this was nice little profit here. However, the important point here is, or the purpose of this video is to see whether the shooting star high becomes resistance. And as you can see from here till here, that is, there is not a single candle which has crossed and closed, crossed or closed above this purple dotted line here, because that is the high of the shooting star that has been created. Okay, so this gives us confidence that the high of the shooting star becomes our resistance point. So that gives us an indication of where we should keep our stop loss. This candle was trying to cross or poke its head above the shooting star resistance. However, it failed to do so. Even if this would have crossed, chances were low that it would close above the shooting star resistance. There is a difference between crossing and closing. Just having the price go up and come down is not enough. It must close above the shooting star resistance to nullify or to negate the possibility, further possibility that this is resistance, because once it is broken, it is broken. Okay, so this chart illustrates how a shooting star can become resistance, or how the high of the shooting star can become very good resistance point for us. Alright, I wanted to show you this chart of a shooting star because this is a weekly chart of Pidilite. The higher the time frame, the higher is the probability that the trade will work out in our favor. So we are looking at a chart of a shooting star. So a nice support that is being built here. Remember, this is a weekly chart. So if we look at this from here till here, that is 5 candles. So 5 weeks is more than 1 month worth of price action. So nice support getting built here, after which the market started to go up. And what do you have here? You have a shooting star. Now, I'm not comfortable with this small lower shadow, but nevertheless, if we look at the height of the upper shadow relative to the height of the real body, it is multiple times the height of the real body. And in the definition, we had mentioned that the real body of the shooting star must be as small as possible. So if we were to take this trade, we would keep our entry point here, our stop loss just above the high of the shooting star, and this would be one of our support areas. This would be our major support area. So this is S1. This is S2, support 1, support 2. If this is not 2:1, if this distance is not 2:1, I would be uncomfortable taking a trade as a conservative trader. But as an aggressive trader, I would take that trade to see what happens till when the price reaches this level. If it starts to stall there or it starts to consolidate, then as an aggressive trader, I would be out of that trade. But as a conservative trader, if this support was not there, then I would directly aim for S2, which is quite a significant reward to risk, almost 3 or 4:1 reward to risk. One negative for this trade is that the shooting star is not confirming any prior resistance, but that negativeness is voided by the fact that it's a weekly chart. Okay, so it's coming on a high time frame, so it took an entire week for the market to give us the signal that the bears have now taken control over the market. So even though that's one negative factor, that there is no prior resistance confirmation, but still on a weekly chart, if we have a shooting star, it increases the probability that the trade will work out in our favor. In this case, yes, it might not have reached this quickly, because if we would have taken this as our target and we would have taken this position, then we are talking about from August till we would have had to wait for more than 4 or 5 months for our target to be hit. That's quite a long time to wait for. But if you look at this was achieved fairly in a couple of months. This target was achieved, although the reward to risk was not that great. But nonetheless, look at the high of the shooting star for the entire range of this chart, which is from August till about January, February, so 6-7 months. The high of the shooting star has held as a resistance. So that goes to show how powerful that resistance created by the shooting star is, especially if it is coming after a steep uptrend, that too on a weekly chart. So we have a clearly defined level, which we know that for the next few weeks that level is not going to be achieved. This is also good for options traders. You have some idea of where the price has stalled. If we look at this 750 level, it's a round number because it's ending with 50. So maybe it's a psychological number, 700, 750, 650. Maybe all of these are round numbers where problem starts to happen. Like this is 600. There is problem at this level. Okay. So that is how I would look at this chart. I like higher time frame charts because higher time frames give better insights into the market, because one candle contains 1 week's worth of price action movement. So bigger the time frame, more is the information conveyed by one particular candle. Okay. Alright, now let us have a look at the entry and stop loss. We have discussed this before. Let's bring it into focus. This is the shooting star, which is coming after an uptrend. Remember, if it comes after a downtrend, it is not a shooting star. So it comes after an uptrend. So in this case, we have taken a white real body shooting star. So the closing becomes our entry. The stop loss is just above the high of the shooting star. Remember to keep it just above the high of the shooting star. So that's our entry and stop loss, and the target depends on where the previous support is. So let's quickly have a look at an example. So this is a daily chart of NTPC. So if I look at this trade, that's a nice uptrend. So you have a clearly defined shooting star, especially coming after a tall white candle. We have discussed this before. A small real body coming after a tall real body indicates a shift in psychology. Even if the trend does not completely reverse, it is much more likely that the trend will go sideways now. After a long uptrend on a daily chart, there is huge possibility that it will either go sideways or it will come down, especially after this bearish candlestick pattern, bearish single candlestick pattern, which is the shooting star. So I take the high and keep it up. I keep the stop loss just above the high of the shooting star, then that would be the entry point to take a short position. And then we can expect the prices to go down, at least hit this level. That is our first support level. So that is what I would call as S1. This is for futures traders, or this is for options traders. Options traders can think of doing selling calls, something like this, or buying puts. That kind of things can be done. But if you are a beginner trader, you're just starting out, then there are ways to take short positions through the futures contracts. So that's the shooting star resistance. That's the entry point created by the shooting star, and we can expect the prices to go down from here. Although it's a low probability, risky trade, it's an aggressive trade because it is not confirming any prior resistance. So in this case, the resistance has held on a daily chart, and of course the target was achieved, but it took quite a lot of time for that target to be achieved. So this was the candle that first hit our target, but we had to wait a lot of days for that target to be achieved. But there are ways to exit the market at this point or at this point, which we will be discussing in some other course or module. But we don't have to wait till this candle appears. There are other ways of exiting the market, which is not the scope of this this video or this module. So that's the stop loss, that's our entry point, and we can expect the prices to go down from here. Okay? So let's have a look at how to set profit targets with the shooting star. In this case, the shooting star is confirming prior resistance. This is a daily chart of Axis Bank, and if we look at the uptrend shown by the blue arrow, after the uptrend, you have this consolidation in the price where the price has gone almost flat. And I have drawn a purple dotted line here, which marks the resistance point. The high of this consolidation becomes our resistance because that is where the price has gone down. Look at this pattern. What is this pattern? This is a hammer pattern, which gave us an early signal of the price going up. Then you look at this pattern. What is this pattern? This is the bullish engulfing pattern, confirming the support created by the hammer pattern. Also, if you observe this, there is a rising window here. Window means from the high of this candle till the low of this candle, there is a price vacuum. There is no price action here. That is called as a rising window in Japanese candlesticks terminology. And in Japanese candlesticks terminology, the rising window becomes support. So you have multiple support points here. One is this rising window, then the hammer, then the bullish engulfing pattern, all pointing towards the market going up. And then you have a shooting star here. Although I would feel more comfortable calling this a shooting star if the trading range were large. But the fact that it's a black real body coming after 4 consecutive white real bodies, that 200 daily chart, I can call this as a shooting star. Also, especially given the fact that it has failed to close above the resistance zone created by this resistance zone created by these candles. So that's our resistance zone, and the shooting star has failed to cross or close above that resistance zone. So that's the shooting star. So if I were to take a trade here, that would be the entry. Now, where would I keep the stop loss? Would I keep it above the high of the shooting star, or would I keep it above the resistance zone? The correct answer is I will keep it above the resistance zone, because I know that that's where the bears are coming back into the market. So if this distance is low, why would I keep my stop loss here? Why not keep it at a conservative level where we know that the price might not go there? So you might have a candle which just goes above this shooting star high, goes into this resistance zone and then comes down. So we don't want that to happen. That would take out our stop loss. So I would want the stop loss to be above this purple dotted line, entry point to be here, short position. Nice reward to risk trade, aiming for the first target, that is support 1, and then the second target, that is support 2. If you observe here, this was a piercing pattern. Okay, and then we can expect the prices to go down, and within a few days, both target 1 and target 2 were achieved because the shooting star gave us the early reversal sign that the prior trend was ending. First, we had that confirmation of that resistance point. Okay. Right. Now let us have a look at setting the reward to risk with the shooting star. Let's have a look at this chart here. This is a weekly time frame chart of ICICI Bank. Higher the time frame, more is the probability that the trade will work out in our favor. So we are looking at how to set reward to risk with the shooting star. We have looked at multiple examples of this, but let's bring it into focus. So a nice uptrend in the market, and you have a classic shooting star here. Classic because it doesn't have a lower shadow or a negligible lower shadow. The real body is very small and the upper shadow is more than twice the height of the small real body. So I have drawn a purple dotted line just above the high of the shooting star. That becomes our stop loss. The close of the shooting star is our entry point. So that's our risk. And what is the reward? You have this S1 position, the third purple dotted line, because that is where the price has turned. Remember, it's a weekly chart. So if we look at these 3 candles, okay, that's a morning star. If you look at these 3 candles, not a perfect morning star because it's coming after a flat market. Okay, morning star is something that comes after a downtrend. So I wouldn't call it a perfect morning star, but if you look at that construct, it matches that of a morning star. So I wouldn't call it a perfect morning star, but the 3 candles represent the bearishness, then the indecision and the upthrust by the long white candle. Because it's a weekly chart, I'm giving weightage to this. If this were a lower time frame, I wouldn't look at this. And for 3 weeks, for 21 days almost, this low has held. So that is why I consider it as a major support area. So that's the risk, that's the reward. I think it's a 2:1 reward to risk ratio, which is fair enough. Then you have another support point here, which is S2. If you draw this line, so that is, I think, 3:1 or 4:1 reward to risk. It's a low probability, risky, aggressive trade because it is not confirming any prior resistance. We have to go back many weeks or many months to see if there was any price action which created a resistance. Someone asked a question to my coach, Mr. Steve Nissen, whether how long or how back should we go to see where was the prior resistance created by the price action. Was there any time when this price level was reached previously? So Steve Nissen replied that you have to go as long as possible. Even if it is 10 years, 15 years, that is fine. But go back as long as possible to see whether that was a resistance point. The market always has a memory, or there are professional traders always looking at prior resistance points. So that's the beauty of candlesticks. They can be used on any time frame. They can be used on any financial instrument. They can be used on any asset like stock, commodities, currencies. So you have a clear stop loss, clear entry, clear profit targets. When I look at targets, when I look at support and resistance lines, the reason why I like support and resistance lines is because they are horizontal. They are not diagonal or they are not zigzag or anything. If I ask 2 different traders to draw 10 lines, somebody might draw it like this, somebody might draw it like this. Somebody might draw it like this. So when you talk about diagonal trend lines, there is a bit of subjectivity, but my coach my coach Andrew Mitchum from New Zealand says that a horizontal line is a horizontal line is a horizontal line. Okay? You cannot dispute that the price has stalled at this price level. Even you can decide a precise level of the price. You can find out the precise level where this stalling has happened. So it's concrete in cement. You know where the bulls are sitting in the market. You know where the bears are sitting in the market, and accordingly, you can take positions. Look at the precision of the candlesticks. 3 weeks, for 21 days, the price has been trying to break that high but couldn't do so. And now you can understand the importance of why we need to keep the stop loss just above this purple dotted line, which is the high of the shooting star, just by a small 1 or 2 ticks. In fact, it is more than 1 or 2 ticks because it's a weekly chart. So if it's a weekly chart, then you have to keep it slightly higher than drawn by the purple dotted line so that our stop loss doesn't get hit. So for 21 days, the market was trying to hit this, cross this or close this, but they neither crossed nor closed above that line. So, and once that happened, it was a clear sign that the bears are in complete control of the market. So the actual battle on this stock was fought on these 3 weeks. When that battle was over, then there was no stopping for that stock. So this target was hit, this target was hit. So these 3 weeks were the 3 critical weeks, which gave us the signal as to what is going to happen on that stock. Okay, and this was marked by the prior shooting star, which created a very strong resistance level for us on a weekly chart. Let me repeat that. Okay. Right, now let us have a look at a standalone shooting star. Shooting star not confirming prior resistance. We have looked at similar examples for the hammer, the bullish engulfing pattern, the piercing pattern, and the morning star. So here we will look at a shooting star not confirming prior resistance. Is a risky trade because we don't know what is going to happen next. It is not confirming any prior resistance point. So let's have a look at a quick example. The market stalled here, created a support area. Then the market started to ascend, a nice uptrend. You have a standalone shooting star here. It is not a classic shooting star because of the small lower shadow. Then you have the resistance point created by the shooting star. So that would be my stop loss just above the high of the shooting star. That would be the entry, and probably this would be our support 1. So this is S1, this is entry, and that is our stop loss. So that would be our risk. Now the point is, this is a standalone shooting star, so it's a risky trade, it's a low probability trade, it's an aggressive trade. So for aggressive traders, you can look at this kind of a trade. But for conservative traders, I wouldn't take this trade. One positive about this is the difference between the shooting star and the prior candle. Look at the difference in the size of the real body. That tells you about the shift in the psychology of the market. It's a tall body. This is a very tiny body, which means that there is confusion in the market here. And that too, it's a black body. So after 2 tall white candles, suddenly you have this candle that should speak volumes about what is happening in the market. The bears are clearly stamping their authority here, saying that there is a problem here on the daily chart of HCL. So that is one positive, because we have already looked at what happens when a shooting star comes after a tall white candle. For this white candle, if you compare the shadows, the lower shadow and the upper shadow is quite bigger than the lower shadow. So that's That was one bearish sign, but nonetheless, this was a very positive bullish candle followed by a shooting star. So that's an aggressive trend. It's a standalone hammer. In this case, it has worked out, but do not take this trade without keeping your stop loss here. The price might as well keep going up because it is not confirming any prior resistance point. And in this case, our target was hit. If you look at this candle, what is this? That's a hammer coming after a long downtrend. You have a lower shadow which is more than twice the height of the real body. Even if it is black, it is fine. As for a shooting star and for a hammer, the color of the real body does not matter. It's just that where is the real body occurring? In the hammer's case, it is occurring at the upper end of the trading range. In the shooting star case, it is coming at a lower end of the trading range. If you look at this candle and the shooting star, it's almost a mirror image. If we just flip it over, you have the shooting star it's like an inverted hammer, but coming after an uptrend. And it's a hammer which comes after a downtrend. So probably this trend that started might have ended at this hammer. Okay. Alright, in the previous video, we looked at a shooting star that was not confirming prior resistance. So let's bring our focus on a shooting star that confirms prior resistance. That is called as a conservative trade because we have predefined levels. We have seen what happened at these levels in the past. So this is an intraday chart. This is a 5-minute chart of Bajaj Finance. It is a shooting star confirming prior resistance. Now, you have a shooting star here. It's coming after an uptrend. If you look at the price action from here till here, that's a nice shooting star. Look at the tall upper shadow. So, and you have a pattern here which we have not yet discussed, but that is another pattern where a tall black candle comes after a tall white candle. That is another bearish pattern. We will discuss it in the next module. So, you have bearishness here, you have bearishness here, okay? Then you have this candle which is not a perfect shooting star. If we measure the upper shadow, it is not more than twice the height of the real body. So I would be uncomfortable calling this as a shooting star. And that too, there is not much of a trend. There is only one candle here. But that high is very important because that is where the price has turned and it has gone down. So I consider that high as a resistance. This is the reason why I have drawn a purple dotted line here. And look what it coincides with. It coincides with the 4,000 level, which is a very important psychological round number because it has 3 zeros at the end. So it seems to be an important resistance point. That is where the price has stalled on this candle. And if we look at the price action from here till here, there is not a single candle which has closed above that 4,000 level. It might have crossed above that level, but it has not closed above that level. So that is one resistance point, that is R1, I would say. Then this candle also has created a resistance point, which none of these candles has been able to cross. This has created another resistance point. So if I say this is R2, if I say this is R3, okay, so this entire zone becomes our resistance zone. That is where the bears are sitting. So the moment the price tried to cross this, the bears attack the price. So now you have a shooting star, which is confirming this resistance zone. So it enters the resistance zone. The bears push the price back under the resistance zone and close it under the resistance zone. And that's a shooting star. It is coming after 4, increasing. The height of these white candles is increasing, after which the price went down. So a shooting star confirming prior resistance zone is a very powerful bearish sign. And in this case, the shooting star has created a downtrend in the price. And who knows for how long that shooting star resistance was held. Okay. So a shooting star confirming prior resistance is a very positive sign for short position takers. Shooting star confirming resistance is a conservative trade, okay? So now let us have a look at the shooting star with price confirmation. So we have looked at the standalone shooting star. We have looked at a shooting star that confirms prior resistance. Now we look at the shooting star that provides price confirmation. That is called as an ultra conservative trade. So you have a nice uptrend here. It's a daily chart of Reliance Industries. So we are looking at a shooting star with price confirmation. So you have this resistance established by this candle. Is that a shooting star? I would be uncomfortable calling it as a shooting star because if we measure the height of the upper shadow, I think it is twice the height of the real body. However, it is not more than twice the height of the real body. So it makes me uncomfortable. But it is a resistance. It has created a resistance point, which I have drawn here, the purple dotted line, because that is where the price went down. Remember, it's a daily chart. So for so many days next, none of the candles could cross or close above that purple dotted line. So that's a resistance line. So that is R1. Another important thing to observe here is the 1000 level. Okay. So depending on when you are looking at this chart of Reliance Industries, I don't know which year this was. I have not mentioned the year it is. It might be a very historical chart, but so this is R2. Okay, very important resistance point. Not even this candle has been able to close above that 1000 level. It's a psychological round number ending with 3 zeros. See, these kind of numbers are very important. If it is 1001 or 1002 or 1005, it doesn't matter. But if it is 1000, that's a whole number. That's a round number. Okay. So this candle has been able to cross that level, but it has not been able to close above that level. So if we say that this is R2, then you have a zone. Okay. As professional traders, it is very important for us to know how to draw the resistance lines and resistance zones. There is a difference between resistance line and a resistance zone. This is a resistance line. That's a resistance line. But when you see the price stalling in two lines like this, which are close to each other, that's a zone, okay? And look at the shooting star. It's not a perfect shooting star because of that small lower shadow, but look at this shooting star. It has failed to both cross as well as close above that resistance zone. It has neither crossed the resistance zone nor it has closed above the resistance zone. And it is a shooting star which is coming after a prolonged uptrend. Okay, so the market is making higher lows here. These are lows, so these are higher low. These are higher lows here, 1 and 2. So it's a nice uptrend. When the market is making higher highs and higher lows, that is called as a clearly defined uptrend. Okay? So after a nice uptrend, we saw some stalling at that 1000 level, then the shooting star. Now in this video, our objective is to wait for price confirmation. Although here we don't need to wait for a price confirmation because we already have the prior resistance confirmation. But if we want that extra confirmation, then we wait for the next candle to appear, which is this candle. So that's our close, which has closed. If it closes below the shooting star close, then we have a price confirmation. So remember this, if there is no prior resistance confirmation, then it makes sense to wait for a price confirmation. So if the next candle closes below the shooting star, that's a price confirmation that our bearish view is correct. But if the shooting star confirms prior resistance, then there is less need to wait for a price confirmation. You can directly take a short position here rather than taking a short position here. Because if we take a short position here, then our risk is this. Because obviously we will keep our stop loss above the zone. We will not keep it above the shooting star high. We have discussed that before. So that's our risk. If we take a short position here, then that's our risk. So although we have more probability that the trade will work out in our favor, but we have reduced our reward to risk if we are aiming at this level or this level. That is our support 1, that is our support 2. Even this can be a very good support point because the price, there is a U-turn here taken by the price. So that can also be a support point, but that would diminish our reward to risk ratio. So that is how I wait for the price confirmation. I wait for this up here. So in this case, the price confirmation has worked. So if we would have taken a short position here, we would have made more money. But since we wait for price confirmation, we give up on that gain, which we would have made, but that adds extra probability to our trade. So at least we make this much from here till about here. Okay? So a shooting star with price confirmation is an ultra conservative trade. Alright, now let us have a look at that old model which we have discussed for the 4 bullish engulfing patterns, where we go from the shooting star, then we go for a shooting star which is confirming prior resistance, and then the shooting star that can not only confirms prior resistance, but also gives us the price confirmation. So a standalone shooting star gives us low probability trade. A shooting star confirming prior resistance increases the probability that the trade will work out in our favor. And the shooting star with resistance and price confirmation further increases the probability that the trade will work out in our favor. But the cost is we have to sacrifice on the reward to risk. So this model, basic model, we have discussed previously. Okay? So depending on whether you are an aggressive or a conservative trader, you can adjust which one of these will you use and in which particular market situations. Okay? So let's have a look at an example. This is daily chart of Vedanta. So you have a nice established resistance line here. So let's call it R1. And you have a uptrend here. So the price has made a nice U-turn here. I would call it a shooting star, but I would be uncomfortable calling it a shooting star because it's not coming after a steep uptrend. Remember I mentioned the difference between a hammer and a shooting star is even if a hammer comes after a small downtrend, it is still a hammer, okay? But for a shooting star, we need a long uptrend, at least 4 or 5 candles confirming that it's a nice uptrend. So if it's a daily chart and you have 5-7 candles showing you a nice uptrend, then I'm very comfortable calling it as a shooting star. But here it's only two candles. But nonetheless, if it is coming at the top and after an uptrend, even if it is small uptrend, let us for the moment call it as a shooting star because it is confirming the prior resistance. It has crossed above that level, but it has failed to close above that level, and the upper shadow is more than twice the height of the real body. One negative for this trade is that, which you have not discussed in this module, which is beyond the scope of this training, is that there is a window here. This is a rising window. So between the high of this candle and the low of this candle, there is a price gap. There is a price vacuum. So that is called as a rising window in Japanese candlesticks terminology. Okay? So a rising window always becomes support. So that's a big negative for this trade. If I were to take a short position here, chances are the price may get stuck between the resistance R1 and R2. Chances are the price may get stuck for many days in this zone because I am taking a short position immediately after a support area. So I wouldn't take this trade in reality. But if the shadow would have been a bit higher, where there is no gap, okay, then I would be comfortable taking this trade. Even if I was comfortable taking this trade, I would take a small position because the shooting star is not coming after a long uptrend. It is coming after a short uptrend. So because it is confirming prior resistance, I would take a short position, but my position would be minor. It would not be a major position. Major means the size, the lot size or the number of shares would be lesser, which is proven in this case because see, if this were a very strong shooting star and there was no window here, probably the price would have crashed aggressively. But in this case, just 4 or 5 candles and the price started to move up again. So this is an example of shooting star confirming prior resistance. But because of that gap, that window, that would have restricted me from taking this trade. Okay? Alright, now let us have a look at a quiz question. For this quiz question, I have taken a weekly time frame chart of ONGC. Would you take this trade? Why? If you would take this trade, why? If you would not take this trade, why? So that's the candle pointed by the red arrow. That's the market situation. Just pause the video, come back to it, think about it and come back to it and we will discuss this. Okay? Alright, so my first question to you, is that a shooting star? The answer is no, because it's a weekly chart, okay? You have how many candles? 1, 2, 3, 4, 5, 6, 7. So you have 7 weeks worth of price action where the market has gone flat. And what did we discuss in the definition of a shooting star? For a shooting star, it must come after an uptrend. That condition is not satisfied here. So as my coach Steve Nissen says that the trend is as important as the candlestick pattern itself. So this is not a shooting star. So that is the reason why I would not take this trade. I don't care whether the price goes up from here or goes down from here. Even if it were to go down, I would not take this trade because for me, this is not the candlestick pattern. If this would have appeared somewhere here, confirming these resistance points, then I would have been comfortable taking that trade. But if there is no candlestick pattern in the first place, why would I take this trade? And that's a weekly chart, okay? So it's a clear indication that it is not a shooting star. Although it looks like a shooting star, so those people who do not have complete education about candlesticks, they might think, okay, the upper shadow is more than twice the height of the real body. The real body is black in color. There is very small lower shadow. The real body height is very small. And they may take a short position keeping the stop loss here. That's a wrong way to trade because the first criteria is to identify the pattern correctly and then look at other points like resistance, support, reward to risk and things like that. But if the candlestick pattern itself is not there, there is no point in taking the trade. In this case, if someone would have taken a short position here, keeping the stop loss here, yes, the trade has worked out. And that too for so many weeks that resistance has not been broken. Or there is no candle here for so many weeks that has closed or even crossed above this line. But that doesn't mean I take this trade. I would not take this trade because this is not a shooting star. Okay? Alright, let's have a look at another quiz question. So in this case, the market is ascending here. It's a daily chart of DLF. Whether you would take this trade pointing on the candle shown by the red arrow. So if you would take the trade, why? If you would not take the trade, why? Think about it. Pause the video. Come back to this. We will discuss it. Alright, so a nice bottom formation here on a daily chart. Okay. I would not be comfortable calling this a hammer because of this upper shadow. Okay. you have a rising window here, which we have discussed, a price gap between two candles, and the market is ascending. So that's a nice bullish indication. The rising window is a continuation pattern where the rising window says that the prices are likely to go even higher. Okay, so nice uptrend. You have a shooting star here. Now some of you might say, Rohit, how is that a shooting star? You have 1, 2, 3, 4, 5 days worth of price action where the market has gone flat. How can we call it a shooting star? But if we really look at the price action from here till here, what was the price here? Around 160. What is the price here? Around 200. Okay, so 40 points a rise in the price on the daily chart of DLF, and that too in how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Just within 2 weeks, the price has gone up 40 points. That too on a chart that too on a stock which is priced at 200 in recent levels. So 40 as a percentage of 200, that is 20%, okay? That is a 20% rise in the price of one stock, which is significant. If the stock is going up 20% in couple of weeks, that's a huge price rise. I don't care what this price action is. That's a huge price rise, okay? So you have this red line which I've drawn at 200. Look at the precision of candlesticks. This candle tried to cross and break and failed in both. So this candle gave us that affirmation that 200 is a very important round number, psychological number. It's a very important resistance level for DLF. So the shooting star has failed. The shooting star has respected that resistance level created by this candle. It has also respected the 200 resistance level, which is also a psychological round number, which is ending out at 20, ending with 2 zeros. So definitely a lot of things are positive with this trade. One is the shooting star itself. Second is the long uptrend after which it is coming, almost 20% rise in price. Third is the resistance created by the candle. Fourth is the round number which the shooting star has failed to cross and close. So you have multiple signals coming here that would give me the comfort level to take an entry here. Keep my stop loss above this resistance zone, because you have a zone between 200 and the shooting star high. You have a zone. So that would be my stop loss. And I would aim for the price to go at least, this is our support 1. We can call this as a support, but since the price was flat, I wouldn't give much weightage to this. So this window is our support zone. Okay. So that is how I would look at this chart, and indeed it has worked. So this is the shooting star confirming prior resistance, which is a conservative trade, and it is also confirming the 200 level. It is also failed to close above that level, which is also another confirmation. If we wait for a price confirmation, we will have to wait one more day. So if you would have waited for this close, then this short position also would have worked out well for us, because the market went down from there. As you can see, there was some stalling here. This candle couldn't cross or poke below the support level created by the rising window here. Okay. So I would take this trade.